my general advice to people, I mean, we have an interest in credit cards, but people, I think people should avoid using credit cards as a piggy bank to be raided. I had a woman come to see me here not long ago, and she'd come on some money, and not very much, but it was a lot to her. And she's a friend of mine, and she said, "What should I do with it?" And I said, "Well, what do you owe on your credit card?" And she said, "Well, I owe X." And I said, "Well, what you should do," I don't know what interest rate she was paying, but I think, I think I asked her and she knew, and it was something like 18% or something. I said, "I don't know how to make 18%. I mean, if I owed any money at 18%, the first thing I do with any money I had would be to pay it off. It's going to be way better than any investment idea I've got." And that wasn't what she wanted to hear. And then later on in the conversation, she talked about her daughter, and her daughter had $1,000 or $2,000 or something, and she said, "Well, what should I do with," and she named the girls, "money?" And I said, "Have her lend it to you." And I mean, if you're willing to pay 18% or whatever, I mean, she's not going to find a better deal. I'll lend you money. It just doesn't. It doesn't make sense. You can't go through life, borrowing money at those rates and be better off. So I encourage everybody. It's contrary to my own or Berkshire's interests in certain cases, and the world is in love with credit cards. But I would suggest to anybody that the first thing they do in life is not on. They can get to something else later on, but don't be paying even 12% to anybody. I mean, it's pay that off, and if they're really a good credit and they don't want to do it, come and see me personally. I'll lend you the money at that rate. Greg, what do you tell your children?
No, same advice. Excellent advice. No, I have three that carefully use their credit card. More, I would say, for not the. Obviously, people use it a lot more as they go into the digital world and e-commerce world. But then the goal has to be to repay it. It doesn't mean you. Because you have to use it for those type of transactions, you run up the balance. But there's an incremental risk there now.
It's a matter of convenience for some people.
Yeah.
But I would have trouble if I were paying 12% for money or whatever it might be. It would not be a good thing. You won't see Berkshire paying that.
All right, this question comes from Charlie Wang. He's a shareholder in San Francisco. He says, given the unprecedented time of the economy and the debt level, could there be any risks and consequences of the U.S. government defaulting on its bonds?
No. If you print bonds in your own currency, what happens to the currency can be a question, but you don't default. The United States has been smart enough, and people have trusted us enough to issue its debt in its own currency. And Argentina is now having a problem because the debt isn't in their own currency, and lots of countries have had that problem, and lots of countries will have that problem in the future. It is very painful to owe money in somebody else's currency, but if I could issue a currency, Buffett bucks, and I had a printing press, and I could borrow money, and in that, I would never default. So what you end up getting in terms of purchasing power can be in doubt, but in terms of the U.S. government, when Standard & Poor's downgraded the United States government, I think it was Standard & Poor's some years back, that to me did not make sense. I mean, in the end, how you can regard any corporation as stronger than a person who can print the money to pay you, I just don't understand. So don't worry about the government defaulting. I think it's kind of crazy, incidentally. This should be said. To have these limits on the debt and all of that sort of thing, and then stop the government arguing about whether it's going to increase the limits. We're going to increase the limits on the debt. The debt isn't going to be paid. It's going to be refunded. And anybody that thinks they're going to bring down the national debt, I mean, there's been brief periods, and I think it's in the late 90s or thereabouts, when the debt's come down a little bit. The country's going to print more debt. The country's going to grow in terms of its debt-paying capacity, but the trick is to keep borrowing in your own currency.
Okay, thanks. So you mentioned a few minutes ago that you're very concerned about Berkshire's long-term health, too. This question came in from Drew Estes in Atlanta, Georgia, who says, there's already speculation of a post-Buffett breakup of Berkshire, and given the sway carried by modern activists, the speculation should be taken seriously. Many long-term owners see the folly in this view. A $25 billion ancillary earnings stream provides a lot of flexibility when investing insurance float. On our and your estate's behalf, could you more forcefully make the case of maintaining Berkshire's current architecture? If you don't, that responsibility will fall on an unknown set of shoulders with far less credibility.
Well, if you were to sell Berkshire's various subsidiaries, you would incur a very significant amount of tax at the corporate level before anything was distributed to the shareholders. You can spin off a given one or something of the sort, but the ability to break up a diverse company without tax implications, there was something called the general utilities doctrine that prevailed in various ways up until 1986. And a lot of people seem to comment based on the fact that that didn't happen in 1986. And there's imaginative ways where people try to avoid taxes and can do it in some cases. On certain types of transactions, if you were to break up Berkshire, that would be one factor. But the interaction of being able to move capital around in terms of being able to do things in insurance that we couldn't do unless there were the backup earnings and capital employed in the other entities, there's enormous advantages in capital deployment within the place. So there is not a big discount to break up value embodied in Berkshire's price. And the situation actually is that although all my Berkshire shares, every share, will be given to charities pursuant to a plan I developed back 14 years ago and followed ever since, and will continue following this July. I'll be giving away $3 billion or so worth of the stock. But it still involves a big voting percentage that, including other people that still remain in the picture, aside even from the Buffett family, it isn't going to happen. Now, I will tell you, everybody in the world will come around and propose something and say it's wonderful for shareholders, and by the way, it involves huge fees. I mean, you do not get impartial advice from Wall Street when there's enormous amount of fees possible from one action and no fees applicable from another action. But you can be sure I've thought about it, and I would say that you can count on Berkshire's present posture being continued for a long time. I can't tell you what's going to happen 100 years from now, and I can't tell you exactly what would happen, for example, if certain ideas in terms of wealth taxes changed or taxes on foundations change. I mean, but my plan has been thought out and in place for a long time. And it not only ensures that the money that's been made off Berkshire, all of it ends up going to various philanthropies staggered over time, but it also it will keep the wolves away. Greg, do you have any thoughts on that?
Well, I think the comment on the capital allocation is critical, that we have the ability to move the capital amongst be it the operating businesses or up to the insurance or down, with really no consequences to our shareholders. That's the value driver of the unique structure of Berkshire, and it creates immense value. So that's all I would add, or second, I guess.
Stephen Tedder from Atlanta, who says he's a 10-year Berkshire shareholder, writes in and he says, do you see Berkshire offering pandemic coverage in future insurance policies?
Well, the answer is we insure a lot of things. Sure. I don't. We had somebody come to us the other day wanting insurance involving a $10 billion protection on something very unusual. We're not going to make that deal in all probability. In fact, I would say it's dead. But we would have written pandemic insurance if people had come to us and offered us what we thought was the right price. We would have been wrong, probably in doing it. But we have no reluctance to quote on very unusual things and very big limits. We're famous for it. We haven't done that much of it in certain periods because the prices aren't right. But if you want to come and insure almost anything, and we don't want you to insure against fire if you happen to be a known arsonist or something. But if you come to us with any unusual coverages, either in size or in the nature of what's covered, Berkshire is a very good place to stop. And so somebody wants to buy, they can dream up the coverage and they can tell us the price they'll pay, and we'll consider writing it. We wrote a lot of business after 9/11, for example, and there were really only a couple companies in the world that were willing to write the business. And Berkshire and AIG wrote a lot of business, and we thought we knew what we were doing, but we could have been surprised. I mean, there could have been some follow-on incidents from 9/11 that we wouldn't have known about. You don't know for sure the answer. That's why people are buying insurance. But we would be willing to write pandemic coverage at the right price.